like most people on Wall Street and in this industry, I'll be taking that week from Christmas and New Year off from just about all work. That's one of the beautiful things about this business that has these ancient traditions, ancient like me. Yep, Romulus. So we got, again, a couple of weeks that we'll get together here, and then we'll take another little break and come back in January and keep stomping on these markets. We will have a little bit of time for questions, everybody, so you can queue them up. We'll just get to those in the end, put them in the chat box over there if you have any. And you may have a question that arises from the topic at hand. So we will start to approach that as well. And today, well, we get to the end of the year and what happens out there. This is not exclusive to Wall Street or the stock market industry, but it goes on across the board. People start making these predictions, these grand, large ideas of what's going to happen in the following year. So in this case, 2024. Wall Street just happens to be particularly flooded with those kinds of conversations. And you can't avoid them. I mean, anybody in here, if you've ever even thought about looking at a stock, then you know what we're talking about. So I see a couple of you are Centurions in the Victory Unit Legion. Many of you are not. Matter of fact, I don't recognize quite a few of the names that are with us today. So welcome, everybody. If you're new to this conversation, we try to do this most Wednesdays. The topic is a little bit different than like something Brandon and I talk about on Tuesday nights when I join his podcast, or for our Centurions, our club members only, our Thursday night or Sunday night and analytical and analysis sessions. We try to find topics and ideas that can really help the big picture, the long term, people that perhaps don't have a lot of experience with stocks or finances or markets, those kinds of things. Because just like if that's you, well, that's where I started. That's where Greg started. That's where Brandon started. We all started there at one point or another. Okay, so today we want to talk about these big predictions that these people make. And, you know, you're talking about quite a bit down the road. So 12, 13 months away. How is 2024 going to end? So what happens every year, the financial media gets a hold of these analysts and says, well, what's going to happen to the market? And by the market, let me show you a picture of what I'm talking about. Hang on here. Okay, share screen. Give that a second. All right. Yeah, if you want to see that closer, just click on it. It'll put a little bit of a zoom on there for you. All right. I'm talking about the S&P 500. Of course, there are probably 30,000 publicly traded companies in all the major markets around the world. But there's a strong correlation with any of those stocks over a long enough period of time and the S&P. You know, S&P 500 stocks, Western European stocks, Brazilian stocks are not going to be correlated with China. This is a picture of the Chinese stock market. As you can see, it's down. As a matter of fact, just yesterday, it traded at a multi-month, maybe even a multi-year low. But if you look at the S&P 500 in the last couple of weeks, barring, you know, the last week and a half or so, it was coming up to not quite, but almost to where it was trading at the peak in the middle of July. So there's no real correlation there. But if you look at the rest of the stock market, there is a strong correlation between what goes on in the S&P and the rest of the stock market. Again, excluding China. They're on two diverging paths over here. All right. So they look at the S&P 500. We'll go back to that. And it's closing today at, let's call it 45.50. So they ask all these analysts and they pull together 30, 40, even 50 of these analysts. They say, well, where do you think it's going to end 2024? And if they get 50 people, which probably is close to accurate, they're going to get 35, 40, 45, 50 different answers. But there's going to be a pretty close distribution of 80 to 85% of the answers. Now, I know I just spoke a little bit of math, okay? So let's clear that up for everybody, at least those who didn't take calculus and advanced mathematics in college. All right. So if I ask 50 people, and let's say for the sake of illustration, they say 4,900, 5,000, 5,100, 5,120, 4,950. Okay, on and on we go. 80% of them are going to be close within, a standard deviation of the 5,000 number. They're going to be very close to each other. There's going to be a handful that are going to say, I think it's going to go to 6,000, or one or two who say that it's going to go to 3,000. You'll get that, okay? But 80% of everybody is going to be within, so to put a little more of a simpler understanding on the standard deviation, they're going to be within, 2% of each other, 80% of them, all right? They're all going to be within 2% of each other. So they're really saying very similar things. However, they're still making these predictions. A couple of months ago, maybe last month, there was a big report out of Goldman Sachs when oil was right about here. So you're looking at November, so right around over here, $80 a barrel. And they said it was going to go to 120 in the next 6 months. So that means that it has to almost double from here now, because it's gotten hit quite a bit from even a month ago when they made this prediction. And now they have 5 months instead of 6. I'm not saying it can't happen, but the odds are stacking against it from going that way. A year ago, when oil was at 90 a barrel, Goldman said it was going to 130. So you see they were wrong 2 years in a row. Well, they'll be wrong again this time, most likely. Okay. Well, so we get a lot of this kind of stuff. And what do we do with it? I mean, how is it that you get these analysts from, JP Morgan? JP Morgan, by the way, is calling for an 8% pullback in the S&P in the year 2024. I forget the name of the company. There was another Wolf Research looking for something similar. And then you've got Bank of America going to 5,300 on the S&P. And then Morgan Stanley's going to jump in there with some ideas, and Goldman Sachs will jump in there, and on and on, okay? Now, look, these people are very smart. They have MBAs and or masters and PhDs from the top universities around the world: London School of Economics, MIT, Yale, Wharton, Stanford, Harvard, okay? And they have lots of experience. I mean, the names that you see, if you go through the list, I've been seeing these names for most of my career. I'm in this business 29 years now, and I've been seeing similar names. Some have come and gone, but similar names for most, if not all of my career. And there's at least a dozen of these people that have been cracking at this for longer than that. So you've got experience, super high education. They have the best resources. They have computing power and human capital resources that blow ours away by 1,000 to 1. Okay? I mean, significant resources that these people can pull from. All right. And yet at the end of the year, at the end of 2024, it'll be like the end of any year, you'll have, we interviewed 50 analysts, right? 50 analysts and major fund managers. We got 50 different answers, but a vast majority, 80 or 85% of them are going to be within 1.5% of each other. And at the end of the year, you're going to get 3 or 4 that are close. That's it. Okay? The rest of them, won't be, and yet they get to do it again and again and again. That always kind of interests me. But, you hear this, and you think, you got to think. If you're human, you got to think, well, who am I to disagree with the head economist or head market strategist from Goldman Sachs? Right? That doesn't make sense. This guy's super smart, well educated, extremely experienced, access to untold resources. I have a chat group, a little bit of experience, and I've traded a bit. And how can I compete with that? Okay. And yet these guys are mostly wrong most of the time. It's not a dig on them. It's just what they're trying to do is just inherently mostly an undoable type of thing. So by the way, the 3 or 4 people that get it right, they become super famous, but they're never right the next year.
Yeah.
Like never. And I mean never. They're never right the next year.
Yeah.
Okay. So how do we square this up? Well, number one, you don't listen to the people anymore. That's number one. Okay. And the other thing is, the reason that it's like this is because they don't really have a plan. If they're wrong, if they're right, if they're more right than they should have been, there's no real plan here. And that's what I like to have with anything I do when it comes to business, trading, investing. I like to have a plan of some kind. Call me nuts. I like to have some kind of a structure that allows me the flexibility to make changes if necessary, capitalize on those changes, or to stay with whatever path that I'm originally on. And what I really love about the plan that we have, that Greg and I have, that we share with our Centurions and our Victory Unit, what I really love about it is it doesn't depend on a particular market direction.
No.
Most of these fund managers and analysts who are interviewed, most of them, like 95% of them, so we're talking 45 of them, are going to say the S&P is going to be higher next year than it is this right now, by some degree. Okay, and probably 5,000 is the number, or 5,200, because it's kind of a round number and it's 10% or so.
Yeah.
So they're going to pick 5,000. Okay, most of them are going to pick 5,000, give or take 1.5%. But if you look at most businesses, so real estate, for example, whether you are buying homes to flip or buying homes to fix and rent out, residential real estate is a big business. I'm sure that some or many of you have been involved in that business at some point or another, right? So that depends on an up market. People in that business don't make money when the market goes down. Just look at 08, 09, look at 02, 01 and 02. Right? Direct correlation there. The businesses that are all around you, maybe you are a business owner, the businesses all around, they all depend upon an up economy, a rising economy, and an up market. Every one of them. But the markets don't always go up. The economy doesn't always go up. Now, if it does, great. Is there a plan to be able to leverage that, take advantage of that, benefit from that? But what if it doesn't? What if it goes down? The stock market went down in 2022. We made money. The economy didn't really go down that year, but the stock market did. But what if they both go down together? And by the way, this is not a prediction for 2024. Okay? I'm not going into that route here. What I'm suggesting is that it's critically important for the long-term viability of your financial wealth, your family's continued well-being, to have some kind of a plan that can capitalize on the markets and the economy if they continue to go higher, but also capitalize and benefit if they go lower. And the ability to have that flexibility in there. And if you're right, the economy gets better, the markets get better, then you can keep, chugging along. And if you're wrong, you can make an adapted move. You can swivel, you can shimmy, and then you can take advantage of the other side of that as it goes down and drops. Now, I'm not going to sit here and tell you my plan. I mean, some of you guys are in our Centurion Victory Unit Legion here, so you know. But I have a plan. And it works and has been working very well for me throughout the decades. Okay? I consistently make money, whether the markets go up or whether they go down. It doesn't matter to me whether they go up or whether they go down. It doesn't matter to me whether the economy expands or contracts. None of that matters to me. My plan is effective in that front. Okay? Now, the ability to take advantage of the upside, I have non-stock market assets, for example, and I have bonds, another example, that have been going up in value.
Bonds have been
So-
doing very well.
Yeah, they've been going up in value. So there's an upside correlation there for me. Great. If the market and the economy starts to go down, I can adapt, I can adjust, I can go through, over, or around, and my accounts, my net worth, my family's viability continues to grow and expand. And that's something that people don't teach. They don't teach this in business school. They don't teach this they don't talk about this.
Not enough.
Everybody needs the markets and the economy to go up. And sometimes they don't. To me, there's almost a desperation to it because of how leveraged everybody is to it, and how they don't know what to do if they go down. They don't have a clue, really. I mean, if the markets drop, just like in 22, Greg and I'll be the only people within 1,000 miles of anyone you know who's making any money.
Oh yeah, and a ton of it too.
Yeah. So you have to have some kind of an ability in there. So if you're involved in residential real estate, here would be an example. So you buy homes to rent out, and you got to rehab them, and you're trying to buy smart, but still it's an overpriced market right now. It doesn't matter where you live, prices of assets are high. So you're not getting deals anymore. You're just trying to get what you can. Well, if the markets pull back a little bit, do you suffer? What happens in there? There are ways to utilize the stock market and the options market to create a safety hedge for yourself.
Mm-hmm.
Very inexpensive. In that case, it would almost be like an insurance product.
Yeah.
You pay a little bit of a premium, which you don't expect to get back. But if something happens to your homes, to the houses that you've invested in and put money into fix and rehab, this insurance product can pay off significantly, and you can make money from that. And in the end, because the way you structure options products, you can make so much on those that they can more than make up for your premiums that you've paid, or what you pay to buy them, and more than make up for the losses you're experiencing in your home, the other assets that you have. Okay. Doesn't that sound like a really good way to conduct yourself?
I like that. I like
Yeah,
stability.
like I said.
Because if you know how to navigate the options market, you can have price stability in nearly everything. Like you can lock in oil prices, you can lock in gold prices. You're like, it's so cool. It's
Yeah.
fun.
So that's the plan then. You need to get a plan to effectively create a situation where you can benefit from the upside, but also from the downside. And you need the flexibility to take advantage of either outcome. I mean, the stock market topped out over 2 years ago. Okay? It's been up and down and all over the place for over 2 years now. Our accounts are either at or near new all-time highs, and because they just stay steady with it. It's not like 22 where they got slammed, and 23 where they went up, and 21 and a half. It's not like that. It's just a steady, increasing type of environment. All right. Yeah, right. Cash flows and trading. Okay. But when I'm listening to some of these institutions, there's definitely a change of attitude about how to take advantage of the markets, from buy and hold, which that's the way everybody did things back when I started, to they call it tactical allocation. Things are moving around a lot faster now. People are trading. I mean, institutions that would never have considered trading just 5 years ago, 10, 20, 30 years ago are trading now. Right? The turnover within Warren Buffett's portfolio, I will bet, is higher than it's probably ever been in the history of his company. There's more trading going on right now, which is why you see things run up and then they come back down. And because another reason is the markets have yet in the last 2 years, they have not experienced a real selling climax. And so there isn't that washout. All right, you don't have that cleansing process that typically gets rid of that excess speculation, then allows the markets to really move up sustainably for years and years at a time, like what a bull market typically does. But we haven't been in a bull market. We've been in this 2-year plus trading rate, 25-month long trading range. And so people are getting, chewed up, or people are looking back at the portfolios like, okay, I lost money in 22, I made some money in 23, but on net, I'm flat, or I'm up a little, or I'm down a little. And that's what the market's doing pretty well. I mean, the Dow, Russell 2000, not as well as the S&P, not as well as the NASDAQ. Bonds are probably still down for the year, up in the last month and a half, but still down for the year. So 401k plans, 401k accounts are on net probably up a little bit for the year. 5-6% somewhere in there on average if you surveyed the 150 million Americans that have 401k accounts. That's probably about what they're doing so far this year.
My Roth IRA is up 5.5%, and I follow a similar path with that.
Right, there you go.
Yeah.
So, but that's not a plan though that really effectively works, because what if 2023 went down like 22 did, and now you're talking about serious losses?
Exactly. You got to know how to hedge. So you got to know what to buy and how to buy and when to buy
right.
to hedge.
Right. And we'll be talking more about this in detail. A week from tonight, everybody, we have our next webinar. Greg, you got the link for that?
I'm going to grab it right now.
Great. Post that link. Sign up. If you are already a Centurion, this is not for you. But if you are looking to learn in detail more about what we talked about tonight, plus a lot of other great stock market and financial market pieces of wisdom and education, it's a free webinar. It is a week from tonight, 7 p.m. Eastern Time. Sign up. You will be emailed a Zoom link sometime early next week, and we will dig in. Brandon will be joining. As a matter of fact, he is the main host of this discussion, so he will be there as well. And we're looking forward to the opportunity to spend some time with everybody there next week. Okay. Let's see what questions we have here, Greg.
Yeah, post
Let me see. Hang on.
I just posted the masterclass link. So sign up there, show up, set an alarm as well, just so you're aware beforehand. Put it in your Google Calendar. Make sure you're aware of it.
Hey, cool. We got a comment. We'll get to all of them, Shawnee, especially for you, buddy. Mm-hmm. Hey, Greg, I started your futures course. Awesome. Will the course be a good way to test the waters and learn trading? Absolutely. We've had a ton of great comments about that course. We're excited to be able to continue to bring that to you guys. So enjoy that.
Yeah.
Let's see here.
A lot of people join once they finish the free futures course. You can also just join the Legion whenever you're ready, because then you'll get access to the beginner's course, how to set up your broker, beginner training, intermediate training, advanced trading. You get the live sessions twice a week, one with me, one with Romulus. There's a lot of, great value that comes from the Legion. But yeah, if you just want to dip your toes, the free futures course is kind of like stage one. You're not going to become like rich or anything off of just the futures course, although some people have made some money from it. But it's kind of a good, segue into the Legion. But when you're ready, when you're serious, join the Legion.
Yeah, it's fantastic. So here, Shawnee, yes, certainly Romulus has had some losses, of course. What are some tips or your advice to get one of the most difficult things? Because I want you to think about what's happening here for a second. You have a loss. Okay, you lost money. Well, that sucks. And you were just told in no uncertain circumstances that you were wrong. See, I could be wrong about the weather, but I don't lose money. Now, I don't bet on sports, but I went to a Big Ten college, and I enjoy watching them play their basketball and their football, and I say, hey, they're going to win. Well, believe me, my team doesn't always win. Okay, far from it. And so I could be wrong and am wrong about that, but I don't lose money.
Yeah.
Okay? I could be wrong about a lot of things in life, or I tried the chicken when I should have ordered the steak, and I was wrong. Did I lose money? No, because I'm going to spend $30 or $40 either way. I was just wrong.
Yeah.
So I can be wrong about a lot of things in life, and I am wrong about a lot of things in life, but I don't lose money also. So that's why there's like a double hammer to your head, because you lost money and the market just smacked you in the head and said you were wrong. So an incredibly challenging environment to voluntarily put yourself into every single day of your life. Very challenging. So first of all, the way I learned how to handle that was to start small. Start with an inconsequential amount of money. So let's take the futures market as an example. You can trade minis, which move 10 points. It depends on how many contracts, but if you're trading one contract, 10 points, that's 40 ticks, 40 times, that's $200, just like that. You can make or lose $200 literally on the NQ, which is NASDAQ. You can make or lose that in 3 seconds. Okay. Now multiply that by 10 contracts. All of a sudden you're up or down $2,000 in 3 seconds. Do that a few times in a given day. Let's say you lose. You're down $5,000, $6,000, $7,000, $8,000, and you've spent a grand total of 1 minute in the market. Okay.
I've been there.
Very easy to do. But you can trade micros, which are 1/10 the size of the minis. And now you're making or losing $5 or $10 a trade or $20 a trade instead of $50 or $100 or $200 a trade. And if you're losing $5 a trade, you're not really, you're in it because it's real money. So it's better than doing simulated or paper trading without question, but you're still not all anchored to it emotionally and mentally as you would be with a bigger contract. So that's one way to start off. Start small with an amount of money that if it disappeared, it doesn't mean much to you. But it's real money nevertheless. That's one way to do this. The other way is to trade less. Trade less frequently for a while. Just start getting in there with a small dollar amount. Get a win a day for 2 or 3 months. Then step up the size of the bet a little bit. Then do that for another 2 or 3 months. Then look for 2 winning trades. Do that for 2 or 3 months. This takes a long time. It takes 12, 18, 24 months to really understand what's going on inside of you in order for you to be able to master that. And you will get to a point eventually doing the slow, steady progression, and showing you that's exactly how I did it. It was a slow, steady progression where gains and losses are nothing more than another day at work. Your 2-hour session of trading is just your typical 2-hour session of trading. Most trades you enter will be wins. Most days will be up, but some trades will lose and some days you'll be down. And that's, the way it goes. So for me, I've got another rule in place that when I have a loss for the day, I stop trading. Just quit.
And that's
just quit
opposite
trading.
of what most people do, Romulus. Most people, when they lose money in trading, they're like, oh, I got to get back up to even. And their emotions start to take over and they're not taking high probability setups. So you front run that by saying, oh, I just want to avoid all that frustration. I can come back tomorrow and do something else. Do something more productive.
No question about it. So, and that's me. I just stop trading for the day. I'm done. So there's sometimes when I can rattle off 25, 30, 35 winning trades in a row.
Seriously.
And so I'm doing 2 trades a day. So you're talking weeks of wins without getting a loss. Well, that can lull you into a sense of complacency too, where you get a loss after 35 or 40 straight wins, and all of a sudden just, whoa, what happened?
Yeah,
then I know I've got to walk away, right? I've got to walk away before the mentality starts to grip and the beast takes over and wrong decisions start to get made. Mm-hmm. But the next day I'm back and I get a winning trade, and then later that afternoon or that morning get another one, or the next day get another one. and then just keep going. And then next thing I know, I rattle off another 15 or 20 or 30 winning trades again in a row, and then get a loss or two, and boom, just shut down, step away from the trading room when I have a loss on the day. That's me. So other people will step away for like 2 hours, 3 hours. They'll sleep or eat or go out of the house or out of the office, go do something else,
Go to the gym.
walk a dog, whatever, then come back. That's also a good idea. Some people just say, all right, where's the next good trade? Is it right away? I'm going to take it. Is it in an hour? I'll take that. And they just keep going, and maybe they get their 2 or 3 wins and they stop for that day. That's not most people, by the way. Most people have to kind of switch gears and get away for a bit. And I've done that for a while, and it has worked very effectively for me. And I don't think that I'm going to stop doing that.
Yeah.
Okay.
I like going to the gym if I sense I'm getting frustrated, or if I take like 3 stop outs on a trade. So that's something that helps me. Also, at the end of the day, when the markets are closed, I like to journal my trades, what I did well, what I could do better, reflect upon the decisions. And that's been helpful as well. So
yeah, that's fantastic. Great ideas all around. So yes, good username 420. We work with Brandon Carter. Yes, I've been teaching him trading and investing for a long time, and the Victory Unit Legion, everything you see here is a combination of myself, Greg, and him, and our team. So yeah, we've been working together for quite some time. And if you ever listen to his podcast on Tuesday nights, I was on there last night, as a matter of fact. I usually jump on about 8 o'clock and stick around for 20 or 25 minutes. And we talk markets and stocks and trading and investing and all kinds of financial type of things. So, hey guys, I'm new to trading. Is the Legion program only applicable for people in a specific location in the U.S.? No, we have 25 different countries that we are working with, people all around the world. So we work, very closely with people from all over. There you go. All right. Any other questions? Because we're going to be wrapping this up. Greg and I have an event here in about an hour that we have to prepare for. And if there's nothing else, then yep, you got it. Okay. Everybody have an awesome night. Thank you for joining us. We'll see you guys around the Legion real soon. Take care.
Bye-bye. Peace.